Hi everyone, my name's Tim Fairweather and welcome back to another Brooks Price Action Weekend Market Update. And today we're going to be looking at the DAX 40 futures. So let's go. All right, let's take a look at the DAX futures. Now I've got the 12-month chart here. I'm just looking at the continuous contract and I've got the process that I showed last week in the videos. I'm going to follow that same process again this week for continuity. So interesting, I've got the yearly chart, and if you were to buy after a strong breakout, we've got consecutive bull bars breaking above a prior trading range and a pullback. This is a high one buy. Traders can buy the close or buy it one tick above that high and they get filled on the next bar. And 1-to-1 of that target is 747. The high of this bar is 709. So 50 points. A couple of 5-minute trend bars away from that target. So that's interesting that those yearly traders got all the way up there. How else could you look at it? Well, a trader that bought above this bar, their 2R target's a little bit higher. If they bought the close of this bar, they got all the way up to a 2R, the 12-month chart. If a trader bought the close of last year, consecutive bull bars, even if this signal bar is a little bit higher. I thought that was interesting on the 12. Price action works on every time frame, so I think it's helpful to bring up other time frames when we go through it. So monthly chart, momentum, magnets, measured moves. Well, incredibly strong monthly bar in January, and we've shot right above the high of that bar. If a trader bought, the actual risk they absorbed on that overlap has already gone up to 1-to-1. This is a huge bull trend bar. Sometimes this can lead to a climax. Other times, if it gets a breakout and follow through, it can lead to a measured move up. 1R of that bar is 23,737. This is a strong bull spike. Some traders will look at this spike as the start of a potential measured move. The reason is a spike on the right side of the moving average is a sign of always in. Traders buying here a breakout and follow through of this range. They're already at a measured move of that range. Traders that are buying in here see the pullback, we break above it, their 1-to-1 target's 852 up to 23,000. Other traders might have bought the follow-through bar, which took us up to last month's target. And if you bought the high one, you're up at your target as well. So lots of targets here and higher, nothing to sell on the monthly chart. And let's go to the weekly for a bit more in-depth analysis. A bull channel is a bear flag, often has a trading range breakout, but this is a very strong channel, possible wedge, and this wedge has failed, and some traders might see that as a chance for a measured move up. 1, 2, 3, if they're the 3 pushes, is it from the bull bar, which is basically to the tick up there, so it's actually gone 1 tick above that high, or is the wedge all the way here taking us to 22,900? Either way, when this started to fail and you get consecutive bull bars again, you've now got another buy signal. What I said last week is even though I broke these down one by one, I highly encourage you to look at those videos last week where I've taken it a little bit more slowly. But because these are all related, momentum, always in, spikes, trend lines, channel lines, these are all part of one concept for me. So I have to be able to talk about them at the same time. Otherwise, I'm not going to be fast enough to work out what the market's doing to take good trades. So the buy signal above this bar, you get filled here. Maybe you've got to stop down here. So you hit your target last week. You also closed above the 1R target. So some of these traders are going to hold long. Traders that bought in here as well see these consecutive bars as a pullback. This is an outside bar. So this is a period of sideways trading. What do those traders do? Well, as we go above that bar, we've now got a new high. So their stop can go up there. So now you can take on another position above that bar. So you've reduced your risk and then you've added on another position that's taking you up to 22,900. This is why scalping is good in a trading range, but not so good in a strong trend. There's no reason for traders to exit here. There are no opposite bars. We've got a strong breakout. There's a 70% chance of getting a second leg sideways to up. It was less clear on this bar. Even though this bar gapped down, we still went all the way back up above the high and did not break below the low of this bar. Even if you take a bigger trading range, that was a reason for a potential measured move. But when you're looking at a measured move to take profits or take partial profits, there's no opposite bar there. So there's a good chance that that can go even higher. One of the reasons trends continue is it keeps setting up new measured moves. And the market likes uncertainty, so it needs to go back to those measured moves so there's enough traders to take both sides of the trade. Here is a gap. Here is a gap. This is the middle of the gap. That takes us up to 22,800. So it looks like we're going to 23,000. We're going there faster than I thought we would, but it's just been so bullish. We had spikes in here. We had spikes in here, a lot of sideways price action, and then very strong bull weeks. So always in long, better to be long or flat. This is essentially a bull micro channel, so there's probably buyers below. If this is a spike and a pullback, this is the start of the channel. So bears need a sell signal to bring it down here, but at the moment you're long and you're looking for targets above. So we covered stop orders, no limit order fades in here. This is a strong breakout. This is the exact opposite time to do any kind of limit order fading. You want limit order fades when gaps are closing, but when this gap failed to close completely or sufficiently, what are you going to do when it goes above that last bear bar? You need to buy back those shorts and get out of the way. And stronger bulls are buying and adding to positions, betting that there's going to be more legs in that direction. And that's DAX from the weekly chart. So if we squeeze up this chart, you can see how the bears were trying to create wedges all the way through. We had a dueling lines attempt. You know, we've got 3 pushes up to a double top in here. That failed. Then we had a higher high here trying to get another wedge. But you can see what's happening while this wedge is forming. The pullbacks are not deep. They're not challenging bull swing points. This was good from the bears. I said at the time, getting a 2/3 pullback is good. That gives the bears a chance to do damage here. And when we were looking at this report, I said, this day is really important. If this is going to be a lower high, this bar needs to do a lot. And it closed on the moving average. So even if you're short, you're basically about to reverse. Pull back, strong breakout and follow through. Now it's buy the close, buy the close, buy the close. I thought the bears might get let out here. And what happened instead? We had another 3 bull bars up and we pulled back to where I said there should have been an original pullback. And that's a sign of a gap. That's a sign of a strong breakout. So then really good high 1 buys, high 2s, and it's been bullish all the way since. Difficult for bears to sell. We just gap down to where traders want to buy and we're rocketing up to wherever bears were trying to scale in. So what do you do here? You've got a huge gap up on Friday. Now this can become an island top where we go sideways and down. This is a really strong bull breakout coming after a lot of legs up. So there's nothing to sell to get short. Some traders might be taking profits at these targets. Their targets up here from the weekly chart. There are still targets up to 23,000. The issue now is the risk. You have an inside bar here. It's also a prior breakout point, but the low of this last spike is down here, and that's way too much risk. You can see when we got up to this breakout point, we went sideways, and that risk was 500-600 points. So traders who took that buy were buying here to get up here, and now they got to where they needed to get to. Traders that waited for consecutive bull bars, you buy above there, your stop's wider, but you immediately get follow through. So some traders will pull their stop up and try and keep adding to that position, afraid that they're not going to get a deeper pullback. Here was your sell signal for the perma bears. And what happened? We didn't even go below it. I've said on the stream a number of times, for traders, see that counter trend signal, instead of taking it, wait for them to fail, get trapped, and take the opposite trade. And that was a great looking trade. Other bulls saw consecutive strong bull bars, 2 really good bull bars, buy, 60% chance for measured move up, closed above, maybe they're going to hold for 23. But we're far away from the moving average, so you've also got to weigh up the amount of risk. I think anyone who's buying here is going to trade very small. I think this is just too far away from the moving average. So always in long, better be long or flat. This has the chance to be a climax, but in this kind of environment, there is nothing to go short. So you're either long or flat. And that's DAX for next week. Thanks very much for watching, everyone. I hope you found that valuable. If you're in the Brooks Price Action live trading room, you can catch me trading live next week. Feel free to ask me questions in the comments, or if you're on the Brooks Price Action Discord, you can find me under Tim F. My name's in blue. Otherwise, have a great trading week, and I'll catch you next weekend.